Hey, so it's late February of 2026. It's been over 2 months since we last met on this podcast, where we do exit summaries for the market, both M&A, secondaries, and then my colleague Vikram covers IPOs. This segment is on M&As, and wow, it's been busy. I'm not able to get to the end of this list. There are that many companies this time around. It's not surprising. As the market matures, you're going to see more and more M&A, especially being picked up by both strategics and financials and new age companies. So we have a blend of all of them. One hotel called Brij Hotels acquired 51% by the Tata's IHCL, which runs the Taj Group. And so they picked up some of the promoters, early investors, and essentially are looking for an asset-light luxury expansion, experiential travel play. And Surya Hospitals as well, 49% stake acquisition by Novo Holdings. Officially, it's not disclosed, but we think for about 500-600 crores, which basically values Surya Hospitals at about 1,000 to 1,200 crores. Another specialty care platform build out, capacity expansion. Basically, this is a recurring theme, right? So we want to get this theme out of the way. Just give you a heads up that almost every quarter now we're beginning to see real estate-owned assets which generate income streams from hospitality, hospitals, etc. Tend to see this trend of getting picked up by larger and larger players as they consolidate. There's this sort of fun acquisition that happened, which suddenly came up on the radar thanks to my colleague Dagash. It's iBall. Some of you are too young to remember that these guys were rocking it in the accessory space. They were like the boat and, a bunch of like consumer electronic brands that you see today. They were like that in 20 years ago. So they were a great accessories play, whether that's mouse or like pen drives and anything that enabled mobile and laptop economies. And Zebronics, which is actually also in this space and has become a strong domestic brand with leadership in audio and peripherals and accessories, actually seems to have acquired the brand and IP probably to relaunch, because iBall lost its way and became a sort of like a distressed dwindling asset. So it's interesting how sometimes even a dwindling asset has value in the hands of someone who's like a rising star. And that's a great example in this month's deal flow. Then we are also seeing the startup universe acquire their smaller companies in the universe which are not actually taking off. So Unnati basically bought 51% of Gramophone. So the founders and I think some of the existing investors got a partial exit. In the Agri-tech space, Gramophone is basically doing farm productivity improvement through crop advisory, digital engagement, etc. Unnati is a much bigger agri platform. They clearly saw value in extending this to the same customer base. So that is a great example of a in-industry sort of an acquisition. And then this space has gotten super hot, right? Snabbit and Pronto have become the stars of like the new quick commerce for services in some sense. Starts with home service, but who knows what all they will deliver. Of course, there's a giant in that space called Urban Company, as all of you know. But Urban Company was not doing the complexity of more fragmented household labor, day-to-day labor. But now they're also in the race. And there was a company called Pink, which Axel, GC, Bharat Founders Fund, Better Capital had put money into. But it's gotten crazy competitive. We hear that Snabbit's going to raise another big round. Pronto's raised a couple of rounds. And so Ping got absorbed by Snabbit. We've seen this playbook before. We were in Taxi for Sure. When the Ola Uber wars were at peak, Taxi for Sure got consolidated into Ola. So it's a reminder, a decade-old reminder that these things will keep happening. And it's not surprising at all. And before that, it happened when Flipkart was absorbing a lot of companies almost a decade and a half ago. Then the consumer segment, if you have a 100, 200, 300 crore consumer brand, there's a lot of appetite and interest. So we have one undisclosed deal, Mana Foods, which Reliance Consumer Products picked up. The investors were included Morgan Stanley, Fulcrum, Citby, and supposedly 80% of this company is now going to be held by Reliance. And Reliance, of course, is a behemoth, buys a lot of things in retail, is getting into all elements of retail and brands. So we're again not surprised. Wherever they see value, they do buy into plenty of brands apart from licensing and launching brands. So similarly, two brands which were known to, again, the venture and private equity universe, Wellbeing Nutrition and OZiva. So OZiva is interesting on two counts. One is that it's a Roorkee alum, so actually she's a junior, and kudos to Aarti for being one of those rare female founders who actually have built to scale and shown that they can be role models. I would love to have a chat with her someday and maybe bring her onto a podcast. But they actually had sold, 49%, 51% originally at about a 570 crore valuation or so to Unilever, Hindustan Unilever. And this is very similar to like what you're seeing in Minimalist and Carrot Lane, where the size of the company is not large enough that it's running into thousands of crores of value initially, but the founders are smart to hold on to as much stake and saying that, we are going to continue building and pay us for the performance that we deliver on the numbers, right? And that's fascinating because it allows for a win-win on many, many counts. And it's a very healthy sign of a natural M&A ecosystem. So the other 49% of OZiva, which hadn't gotten sold a few years back, now got acquired for 824 crores, which pegs the value at about 1,680 crores, which is about 3.5 times in our estimate of FY25 revenues. And for Unilever, of course, they've started a sort of acquisition machine with not just Minimalist and OZiva, but other brands as well. And anything that fits into adjacencies in their segments, they would love to get into. So for them, a digital-first nutrition and wellness brand like an OZiva, which has been built well, is something that they acquired. There's another pharmaceutical player called USV India, which picked up 80% of Wellbeing Nutrition for about 1,260 crores. It's very similar math, 1,580 crore value, about 3.5x of next 12-month revenue. The existing PE investors and the founders partly got out. They're probably holding on to some for some upside. But again, pharma, consumer wellness, buying into consumer wellness adjacencies and diversifying itself. This is also a playbook we've continuously seen. So, for the nth time in the M&A commentary section that we've done all through last year, you're seeing asset aggregation in hotels and hospitals. You're seeing old brand acquisitions, which is interesting. And we are seeing consolidation of a particular space, the one in home services, Snabbit buying Pink. And then we've seen the consumer brands, which is going to be evergreen, I think, just given how well consumer brands are growing in this country. We've had two in the sort of tech services space, a company called Atyati. And basically, the company is one that works in Fintech for rural underpenetrated segments across, village networks, etc. And they have an e-service, which is a digital service provided to government and financial institutions. Revenue of almost like 400 crores, right, in FY25. Profitability was not disclosed, maybe kind of loss-making, but got sold for like 155 crores. So BLS e-services, the acquirer basically saw this as obviously an adjacency, and they wanted to build relationships. They have relationships with public sector, private sector banks, and this is a service that they can add to it, and all existing shareholders exited. So it's good to see sort of tech services and tech product companies also get acquired. We don't see the size that we would like to, but I think it's a question of time. Another fintech acquisition, Pension Box. It's a PFRDA regulated digital pension platform. We've heard pitches in this space. We've been a little wary of getting into it ourselves. We don't know whether, in a highly regulated environment where NPS, National Pension System accounts are managed, how large these businesses can be unless they get into multiple adjacencies. And I think Rainmatter had actually originally invested in them, but they took this, I think they see this as a strategic area for their own expansion. And they've grown their ownership to 51% and basically made it a subsidiary with a very small round of $2 million. So it's kind of, that's our expectation, that this would have been a very small acquisition And there's enough headroom again because the founders continue to retain 49%. So the existing investors, 100x VC, Keynote Capital, Let's Venture, they were all bought out. But I think the founders in Brain Matter, which is actually Zero, will continue building, which is again great for the ecosystem. As strategic things, there's immense value in the business and allows for the founders to create wealth for themselves and value for themselves, while giving a lot of early stage investors a very handsome exit, hopefully. We don't know the particulars of that deal, but this is also something that we tend to see inbound into some of our companies. And I'm sure we'll have a few later this year in every VC firm's portfolio. Continuing with the trend of consumer brand acquisitions, you might have seen historically that, of course, most of you would have tried 4700 BC, the popcorn brand. And you might have also seen that it's very popular in certain theaters, and that's because Inox had already acquired the brand, right? And so they, obviously, if you ask anyone, they'd say half the reason to go to the movies is to eat the popcorn. And so I'm not surprised that, Inox had the insight to go and buy it. But clearly it's not their bread and butter. It's only their popcorn. But they also didn't want to retain, I think, and build a food portfolio out of the blue. It's a very different DNA. And they ended up selling that to Marico. And it's interesting that Marico is now getting into, snacking and foods as well, whereas PVR is sticking to its business of movies and movie distribution. So this is also very interesting that you see strategics selling to strategics because they don't want to be in anything outside of the core business for much longer. So we covered like a wide range, a lot of fun acquisitions this last 2 months. And yeah, we won't wait for this long the next time around. I think we'll go much faster. The only one that I haven't gotten into too much detail is, again, Bertelsmann, strangely, as though they're a financial investor, has actually bought a much larger stake and become a very large shareholder in Let's Transport after sort of accruing more than their original ownership. And by putting in a $25 million round, they've actually become a majority shareholder, leading a $25 million round. And I think the idea is to move from simply being a trucking marketplace, which is what Let's Transport was, and widening the vision and saying, let's become a wider logistics platform. At least that's what the papers tell us. So a lot of diversity in the M&A universe this last 2 months, and look forward to bringing far more to you in a month from now. Thanks.